Hey, what's up, guys? Welcome back to another
Hey,
episode of Filling Your Cup. I'm your host, David,
I'm your other host, Calvin. What's up?
and today we're going to talk about, buying a home, or at least how to buy a home. As you know, the competition is very fierce in buying a home these days, and this guy will hopefully help you get a leg up on your competition in getting set home. So, no, without further ado, let's get right into it.
All right. So before you could start finding a house, this is a kind of general overview of what you should think about first. First things, know your price. Know your price target. Know your price range. Um, and one way to determine that price is to kind of think about how much you make and how much you could kind of make those monthly mortgage payments based on your income or your financial stability, financial assets or cash flow. Number two, save for a down payment. Banks will and lenders will want some sort of down payment or cash in order for them to kind of plug that into their algorithm and hopefully give you a loan in your favor. Number three, getting pre-approval letter. Again, more proof and more information that lenders need to spit out a pre-approval letter for you so you can start looking for houses. And the last one, once you gather all your information, and you should have a general idea of what houses you should be looking for, start finding your house. Start finding your house.
So, yeah, so there are multiple type of loans out there, but we're just gonna go over the two of the more common ones, which is you can get conventional loan or FHA loan, and there's pros and cons for each loan. So I'm just gonna go over a little brief summary of both. So the benefit of a conventional loan is very low down payment. Um, a negative of the conventional loan is you need to have a pretty decent credit score. So a conventional loan, is a loan that's not guaranteed by the federal government and is insured by the banks. Um, it allows you to pay as low as 3% down on your first home, but you need a minimum credit score of 620, which uh which is like a pretty decent score. And unlike the FHA loans, if you don't put at least 20% down, then you have to pay a PMI. That's kind of like a little insurance fee that the lender collect. But if you have at least 20% down, then you don't have to pay this PMI insurance fee. For FHA loan, the benefit of this is if you have really poor credit or really low credit score, you can still get a home. The negative of this is you're going to be paying the PMI for the rest of the life of the loan. But there's a tip to get rid of that if you refinance your loan sometime down the road. So when you're let's say you've been paying your mortgages, you've been building that equity, and if your equity passes 20% of the total home value, then you can refinance into a conventional loan. Basically, in order to get a conventional loan and avoid the PMI fees, you need to have at least 20% of equity in your home. So why do people choose the FHA loan? People choose the FHA loan like I mentioned before if they have low credit scores. Um, you can get a loan for as low as 3.5%, but you need to have a higher than a 580 credit score. Uh, you could also get a loan if your credit score is below that, but if your credit score is between 500 to 579, you need to have at least 10% down payment. So the major difference between the two is one, you need a good credit score, and if you put down 20%, no PMI fee. The other one is you don't really need a good credit score, but you might need to pay at least 10% down, and the PMI fee is forever until the loan is paid off. And there's also like other type of loans like a VA loan, where you need to have served in the military to get to qualify for that. So I kind of left that out. This is part one of part two videos. So in the part two, we're gonna go into more details of these type of loans and what what major other differences there is. So Calvin, what about the pre-approval letter, bro?
All right, so these are some of the, some documents that the lenders will need from you. For example, last 2 years of W-2s or 1099s, last 2 years of tax returns, your P's and L's, if you're self-employed, paycheck stubs, bank account statements to make sure you have money in the bank, retirement accounts, and other assets accounts or properties that you may have. Basically, the lender just want to make sure that you're able to pay them back, especially if they're
Calvin,
loaning.
can you go over what exactly is a pre-approval letter?
Yeah, sure. So the pre-approval letter is a letter that the bank gives you that makes sure that basically says that you've been screened and vetted and gives you the amount of money that the bank will be able to lend to you, so you can start looking for houses. And it also gives the seller a bona fide piece of paper that's saying that you're serious, you're not just window shopping, and you're ready to put down an offer, when the house is right. Yeah, so this is basically what I just said. Seller now has proof that you're a serious buyer who should be good for the amount stated on the pre-approval letter. So you're making sure you're not just messing around or not serious at all when you're looking at houses. All right, but however, even though just because you have the letter doesn't mean that you could get denied or they could take it back. For instance, if your credit score drops below the lender's qualification guidelines, if you lose your job prior to closing a loan, or if you make a couple dumb mistakes such as running up your credit card debt or anything like that, the lender can also just take it away or deny your letter. So be safe. Don't do anything that will cost you the denial.
So this is kind of how I see it. The pre-approval letter is kind of like your resume when you're trying to get a job. You show all your qualification, what you can offer, and your skill set, and you hopefully the prospect employer will see it and be like, hey, I like what I see, I'm gonna hire you. And this pre-approval denial is basically, it's kind of like you got hired, but you're on like a trial run, right? They got you for a trial run, and you don't want to the trial run because you can easily lose that position because you do a bad job, aka wreck a lot of debt. Very interesting, and this is kind of like this is also kind of like the new college degree, right? Like everybody needs at least a pre-approval letter in order to be considered for the house. Unless you're paying all cash, then you don't need to worry about this. You're paying all cash, you could skip to the next video. You're paying all cash, man. You can't do. So know your price. This is the biggest thing about buying houses. You don't want to over leverage. You don't want to buy something that you cannot maintain or realistically afford. So you gotta know your price. And in this example, I'm just gonna go over it. This is an example for around the Bay Area. The homes around the Bay Area is about 1.1 to 1.4 million, and the average salary could potentially be around $100,000. That's why we just use this figure as an example. So assuming you're a dual person household, 2 incomes, both make 100K a year, location California Bay Area. So your estimate net take home pay each month is about $11,000, 11.2, give or take. This is kind of like estimates, but it's very close to the actual amount you took home. So a home around $1.2 million with a 20% down payment is $240,000, which means you're gonna get a loan for $960,000. And that $960,000 loan will roughly cost around $4,800, almost $5,000 a month, assuming 3.1% interest rate. And then the breakdown of the 4.8K is $3,000 for the interest and what's the P stand for, Calvin? Interest and principal. Interest
Principal,
and principal.
yeah.
240 is for taxes fee because you have to pay property tax, of course, on a semi-annual basis, and home insurance. So these are like the three typical fee, expense that you have to save up for. So 4,000, around 4,800. That's roughly 43% of your take home pay, which is doable. We did another video previously that we talked about that you should spend around 30% of your income on housing, but that's not really realistically if you're trying to buy a home in the Bay Area. If you want to rent, then you can definitely find a place cheaper than 4.8K. You find a place for like $2,000, and then your rent expense probably like 15%. But if you're buying a home, this will be about 43%. So you're gonna be saving a lot of money, cutting out, go out to eat. Maybe not go on vacation for a couple years just to save up. But it is doable though. It is doable. With 200K, you're able to buy around a $1 million house. So that's interesting. I always thought that, like, if you don't make at least like 400K a year, then you cannot afford a home in Bay Area. I mean, if you nickel and pinch, I feel like this is proof that it is possible to get a home with a dual take home pay around 200K. I know, Calvin, you're currently looking for a home. Even though you do qualify to get a loan, and because you have a pre-approval letter already, and your income is more than substantial to get the home, right? What are some of the issues you are seeing currently with trying to get a home?
Oh man, even though we got the pre-approval letter, we think we're competitive. There's always a bigger fish, right? There's always a bigger fish in the ocean. We've put down some offers on some homes in the Bay Area, but they keep people are paying like $200,000, $300,000, $400,000 over the asking price in the Bay Area, which is ridiculous right now. So we're having a tough time, even though we think we're competitive in the Bay Area. So yeah, it's my speaking from personal experience right now. But hey, the search continues. It's kind of like Harry Potter. We don't find the wand finds you. So hopefully we find that magic wand and wave that a little bit, and so the house will appear.
All right.
Yeah.
I mean, like I said, this is part one of part two. Part two will go more in detail about what are the two type of loans, the conventional and FHA. I guess more of the restrictions on one or the other, and just kind of go over the other piece of the home buying process, because you have to make sure the inspection. There's also inspection of the house, to make sure the house ain't broken. I mean, that's like, you don't want to buy a lemon, right? Especially this is one expensive lemon if it is a lemon. So
yeah.
So yeah, I mean, let us know. What did you guys think? You have something to add, Calvin? My bad. I think I cut you off.
No, like, comment, subscribe, and stay tuned to part two, which is coming up in a few days.
All right, yeah. So catch you guys in the next one, and peace.